What if I told you that two stocks on the market right now are so undervalued they're practically begging to be scooped up, and could be set to absolutely explode? Imagine catching the next wave before it even starts. Would you take action or just watch as others profit? Today I'm revealing two dirt cheap stocks that Wall Street is sleeping on, but if you know where to look, you'll see the rocket fuel behind them. First up, we've got a biotech innovator on the verge of a breakthrough that could reshape the industry. Their research pipeline is blazing hot and their latest developments have insiders buzzing, and right after that we'll dive into a retail powerhouse that staged one of the most epic comeback stories in recent years. A brand you know, but with a twist you won't see coming. Both companies are flying under the radar, but savvy investors are starting to take notice. If you only watch one video today, make sure you watch this one all the way till the end. I promise you don't want to miss these picks. Smash that like button. Let's hit 1,000 likes. Share this video, drop your thoughts in the comments, and don't forget to subscribe for more wild, up-to-the-minute investing updates. This video is sponsored by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Alright, let's kick things off with a company that's turning heads in the world of medicine and innovation, Viking Therapeutics, ticker symbol VKTX. If you haven't heard of them yet, you're about to see why they're suddenly popping up on every serious biotech investor's watch list. Viking Therapeutics is a clinical stage biopharmaceutical company, and right now, their pipeline is absolutely packed with potential. Their primary focus? Developing novel therapies for metabolic and endocrine disorders. These are major markets with huge unmet needs, and that's exactly where VKTX shines. Their lead product candidate 𝗗𝗟𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏 liver disease that affects millions, and there's currently no FDA-approved cure. Viking's clinical trials have shown jaw-dropping results so far, with significant reductions in liver fat content and promising safety data. But here's where it gets even more interesting. The global market for NASH drugs is expected to reach almost $20 billion in the coming years. Viking is on the cusp of capturing a massive slice of that pie if their drug crosses the finish line. And it's not just VK2809. Viking also has VK0214, targeted at X-linked adrenoleukodystrophy, a rare neurological disorder. Early studies here are showing promise too. That means Viking isn't just a one-trick pony, they're building a deep bench of innovative treatments. Let's talk about why the stock is so cheap. Viking's market cap is still a fraction of its larger peers, despite its late-stage pipeline and successful clinical results. The market is pricing in risk, but that's exactly what creates opportunity for us as investors. The company has a solid cash position, with enough runway to fund operations and clinical trials for the next several years. That reduces the risk of dilution and gives them flexibility to accelerate development without going back to the capital markets. Now, some of you might be wondering, if this company is so great, why is the stock price still lagging? The answer? Biotech stocks are often overlooked until the moment they land an FDA approval or major partnership. But by then, the easy gains are gone. The real money is made by getting in before the crowd. Viking's management team has deep industry experience, and several of their execs have been involved in billion-dollar biotech exits before. That kind of leadership is a green flag for investors hunting for the next breakout. Let's not forget partnerships. Viking has been attracting attention from bigger pharmaceutical companies, and there are rumors swirling about potential licensing deals or even a buyout. Any major announcement could send the stock soaring overnight. If you check the analyst coverage, you'll see price targets well above current levels. Some are calling for a double or even a triple from here. That's based on pipeline progress and the sheer size of the addressable markets. VKTX is also a favorite among institutional investors, the kind of big money that tends to do extensive due diligence before making a move. That's a sign this isn't just a speculative play, it's got real serious backing. Now let's talk about risk. Biotech is always a bit of a roller coaster. Clinical trial setbacks or FDA delays can slam the brakes on momentum. But with Viking's strong cash reserves and robust data, the odds are tipped in our favor. The recent Phase 2b results for VK2809 were better than expected, and that's already started to shift sentiment among analysts and investors alike. The data showed statistically significant improvements and minimal side effects, a rare combo in this space. With multiple catalysts on the horizon, including further clinical trial readouts and potential regulatory milestones, VKTX is set up for a string of news events that could each move the stock. The broader biotech sector is also heating up, with M&A activity picking up, and valuations starting to recover after a choppy couple of years. If sentiment keeps improving, Viking could be one of the biggest beneficiaries. The company's intellectual property portfolio is rock solid, with patents stretching out years into the future. That gives them a serious moat if and when their lead therapies hit the market. Let's not ignore the patient impact either. Drugs like 𝗣𝗟𝗏𝗏𝗧 have the potential to change and even save lives. That gives Viking a mission-driven edge that can inspire both employees and investors. If you're looking for asymmetric upside, where the potential reward dramatically outweighs the risk, this is the kind of setup you want to see. Viking Therapeutics is starting to generate fresh investor buzz, with a market cap sitting at $3.16 billion. Despite posting a net loss of $109.96 million, recent developments have sparked optimism across the board. The stock recently surged 6.3%, a notable jump largely credited to the kickoff of a Phase 3 clinical trial for VK2735, its experimental drug targeting obesity and metabolic disorders. This Phase 3 trial, officially part of what Viking calls the Vanquish program, is specifically focused on testing VK2735's effectiveness in promoting weight loss among obese adults, both with and without type 2 diabetes. For Viking, this is more than just another trial. It's a defining moment in its pipeline, representing the kind of late-stage progress that can shift investor sentiment and long-term outlooks, and that shift is already underway. Analysts are beginning to flag Viking as a potential opportunity for savvy investors. After facing prior challenges, the company's forward momentum is being interpreted by some as a possible turning point, one that could reposition it as a rising player in the biotech space. Still, while the market reaction has been positive, the company's earlier struggles this year serve as a reminder to proceed with caution. Investors will need to keep a close eye on clinical results and regulatory updates in the coming months. The stock is flying under the radar, but the upside could be huge. Wall Street is starting to catch on, but the general public hasn't yet. That's the sweet spot for investing in biotech, right before the crowd rushes in. So if you want exposure to medical innovation, massive addressable markets, and multiple near-term catalysts, Viking Therapeutics should be at the top of your watch list. And remember, in biotech, timing is everything. Now let's switch gears from biotech to retail, and talk about a company you probably know, and maybe even shop at, but might be totally underestimating as an investment target, ticker symbol TGT. Target is one of America's most iconic retailers, with a footprint that stretches coast to coast. But here's why I'm excited. After a rocky period, Target has pulled off one of the most impressive turnarounds in the entire industry. Just a couple of years ago, Target was facing major headwinds. Rising costs, supply chain chaos, and fierce competition from online giants like Amazon put serious pressure on profits. Many investors saw a sinking ship, but what happened next? Target doubled down on its strengths. They revamped their stores, invested heavily in digital, and focused on delivering a world-class customer experience. The result? A retail rebirth that Wall Street is only beginning to appreciate. Let's talk numbers. Target's online sales have skyrocketed, making them a major player in e-commerce. Their curbside pickup and same-day delivery options have become a lifeline for millions of shoppers, especially during the pandemic. But it's not just about online. Target's in-store experience is second to none. They've redesigned layouts, introduced exclusive brands, and created a vibe that keeps customers coming back. Walk into any Target, and you'll see what I mean. It's not just shopping, it's an experience. Now here's where things get really interesting for investors. Target stock is trading at dirt-cheap valuations compared to its historical averages. The price-to-earnings ratio is well below the sector average, even as profits rebound and growth accelerates. Analysts have been raising their price targets as Target continues to beat earnings expectations. Revenue growth, margin expansion, and strong free cash flow are all pointing in the right direction. Target's balance sheet is a fortress. They've kept debt manageable, built up a strong cash position, and continue to return capital to shareholders through dividends and buybacks. That's the kind of financial health you want in a retail investment. Let's not forget about their loyal customer base. Target's brand is beloved, especially by millennials and Gen Z. Their focus on affordable style, home goods, and exclusive partnerships has created a moat that's hard for competitors to breach. Even in a tough retail environment, Target has managed to hold, and even grow, market share. That's a testament to their execution and adaptability. There's also a hidden asset: Target's private label brands. These in-house lines generate higher margins and keep customers locked into the Target ecosystem. From groceries to fashion, these brands are quietly driving profits higher. Target's investments in tech aren't just for show, they're driving real efficiency. Inventory management, supply chain optimization, and personalized marketing are all powered by cutting-edge technology. The company's leadership team deserves a ton of credit. CEO Brian Cornell and his crew have navigated some of the roughest waters in retail and come out stronger on the other side. Now, some folks worry about competition from Amazon and Walmart, but Target's differentiated approach, Blending online convenience with in-store experience sets them apart. Let's talk about valuation again. With shares still trading at a discount, you're getting a blue-chip name at a bargain price. That's the kind of setup that Warren Buffett himself would love. With a market cap of $44.41 billion, earnings per share of $9.13, and a price-to-earnings ratio of 10.69, target reported $106.57 billion in revenue for 2024, alongside a net income of $4.09 billion and a dividend yield of 4.59%. Yet, despite the strong earnings, its current stock price of $97.60 is trading at 97.19% of its estimated fair value of $192.46. This steep discount hasn't gone unnoticed. With shares down over 60% from all-time highs, analysts now see Target as a compelling opportunity for long-term investors seeking value. The company is doubling down on digital transformation and operational streamlining, addressing prior inventory missteps and aiming to reclaim market share in a tougher-than-ever retail landscape. But it's not just about numbers. Target is also reinforcing its community presence, recently announced as a platinum partner for the 2026 Special Olympics USA Games, a move that highlights its focus on social impact and brand goodwill. And with the back-to-school season on the horizon, the company is keeping 2024 pricing steady on school supplies, aiming to win over budget-conscious families in an inflation-sensitive environment. Still, Target isn't without its headwinds. The company is grappling with shifting consumer behaviors, where more shoppers are cutting back on discretionary spending. That shift has hit sales of higher-margin products hard. Operating margins have shrunk to just 3.7%, squeezed by markdowns, e-commerce costs, and underwhelming sales volume. Adding to the challenge, public sentiment has cooled amid criticism of the company's pivot away from its prior diversity, equity, and inclusion efforts, an issue that may be affecting store traffic and brand loyalty. In the end, Target presents a classic case of risk versus reward. There's clear potential for upside, especially at current valuations, but the company will need to navigate operational pressures and shifting consumer dynamics carefully to turn that potential into sustained performance. For investors, it may be a question of timing and patience. That means you get paid to wait while the company continues its comeback. Looking ahead, Target's growth potential is massive. They're expanding into new markets, rolling out fresh store formats, and exploring international opportunities. The runway is long and wide. If you want a stock that combines stability, growth, and value, Target is hard to beat. The market is still catching up to the turnaround story, but smart investors are already taking advantage. Remember, in investing, perception often lags reality. By the time everyone else realizes how strong Target's fundamentals are, the easy money will be gone. So if you're looking for a dirt-cheap stock with huge upside, a legendary brand, and a proven management team, TGT deserves a spot on your radar. Don't let this comeback story pass you by. Alright, we've just covered two dirt-cheap stocks with explosive potential, a biotech innovator breaking new ground, and a retail legend staging a comeback. These are the kind of opportunities that can change your portfolio, but only if you act before the crowd. Remember, the key to big gains is finding value before it's obvious to everyone else. Both Viking Therapeutics and Target are sitting at the intersection of deep value and massive catalysts. If you're enjoying these stock tips and you're ready to level up your investing skills, I've got something game-changing for you. I've just relaunched my Value Stocks Investing Master Course, designed to teach you the exact principles used by investing legends like Warren Buffett and Benjamin Graham. But this isn't just theory. You'll learn how to spot undervalued companies using real-world metrics, build a high-quality portfolio, and protect your investments no matter what the market throws at you. Whether you're just starting out or want to sharpen your strategy, this course gives you the tools and confidence to grow real, long-term wealth. It's packed with step-by-step lessons, powerful insights, and practical strategies you won't find anywhere else. So if you're serious about investing smarter and building a future you're proud of, click the link in the description and pinned comment to join today. And if you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the Stocks Galore Patreon today and take your investing game to the next level. Our members there get full in-depth analysis on most of these stocks I mention here. Head over to patreon.com/stocksgalore and become part of our growing community of smart investors. Link is in the description. Now, I want to know, which of these two stocks do you think has the most upside potential this year? Let me know your thoughts in the comments, and don't forget to like, share your ideas, and subscribe for more awesome investing videos. Catch you in the next one.